Welcome to Drill Down Earnings. We have quarterly results out from NVIDIA. Everyone knows that. Everyone's talking about it. This is the biggest story in the world of business right now, but we cover the 50 most important companies in technology. Is NVIDIA number one? Perhaps it's the biggest market cap company in the world. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And we cover these technology companies. Again, NVIDIA, of course, I don't need to talk to you about how important it was. This is Q2 26 earnings. This is better than expected. The expectations on Wall Street, better than my model. In particular, $46.7 billion in revenues, up 6% from the last quarter, 56% from a year ago. And yet some people weren't thrilled with this. Let's break it down and look into what actually happened here in this quarter. So the most important thing going on in the quarter is what they didn't have, and that was sales of their H20 chips, chips that they had especially created to sell into the Chinese market to obey the import restrictions imposed by the US government. Then the US government stepped in and said, you can't even sell those anymore. Company took a big write-off for that about 6 months ago. So in this quarter, there were zero H20 sales. It hurt their business. So the revenues were up only 56% from one of the best quarters any company had ever reported in the history of mankind a year ago, even bigger right now. But we knew that going into this. In fact, they were actually able to sell some of the H20 chips elsewhere to places that were allowed to buy whatever they wanted because there's such great demand for the graphic processor units coming out of NVIDIA. So earnings of $1.08 a share for those of you who care, and strong shipments of the Blackwell. They're cutting edge chips and indeed the systems around that. Let's look deeper beyond those headline numbers here. So profits recovering, operating margins out to 61%. It helps that they had already written off some of that inventory and then were able to sell it because now it comes at kind of essentially no cost. But 61% operating margins is just amazing when you think about how big this business is, that they can capture so much. And data center, 4 years ago, that was a great business, 40% of revenues for a strong and growing business. Well, now it dominates. It has come to dominate NVIDIA's business with well over 80% of revenues. Even as gaming did okay, the gaming business became 9% of revenues in this quarter. That data business still cranking 56% year-over-year growth, up over $40 billion in revenues in the quarter. These numbers don't even make sense. They are so big. The Blackwell, their cutting edge GPU, that revenue for that group, 17% sequentially. Their Grace Blackwell 300 production saying they're doing 1,000 racks a week. That's just an amazing amount of these semiconductors. Their data center segment revenue, as I mentioned, $41.1 billion in revenues, up 56%, despite the $4 billion decline in those H20s that they couldn't sell. And the networking business also doing quite well. I follow the networking so close because they actually do have competitors in networking. They got $7.3 billion in networking in the business, up 46%, up 98% year over year, 46% sequentially. That's their what they call InfiniBand, as well as their Spectrum X Ethernet. Ethernet always wins. So the gaming business, I mentioned that this business was in the doldrums. It was shrinking even 6 months ago, getting smaller on a year over year basis, but now at 51%. Year over year, and kind of making up for some of the losses elsewhere. That business doing almost $4.5 billion in the quarter, 4.3 to be exact. Their product there is the GeForce RTX 5060 or GeForce RTX 5060. I don't know, whatever you want to call it. That's what the product is. It's doing quite well. And despite the lack of H20 shipments into China, they actually were able to sell $650 million worth of this stuff to other places that wanted any kind of chips coming from NVIDIA. They're selling everything that they can make. And even within China, they sold other stuff that they're allowed to sell to the tune of $2,769 million in the quarter, well down from where they were both a year ago as well as last quarter. But a strong quarter, and indeed a lot of the commentary in the conference call was about China, and I'm going to get to that. But first, I want to talk about Singapore. I've talked about Singapore before in my research reports, which some of you get to read, and in these videos, which many of you get to see. But it was interesting to see the Singapore business grow fantastically as China was shrinking, and I wondered, is someone getting around these export restrictions? Is we know that the DeepSeek work in China may have been done on some illegally imported NVIDIA chips. And so you wondered, is Singapore growing and they're just moving these chips right through Singapore to China? Well, the company was a lot more clear about that. Not so much in the conference call, certainly not in the press release, but into the 10Q, which they released a little while after these results came out. I went through the 10Q as quickly as I could. And The Singapore business is still growing at 81% on a year-over-year basis. And if you look at the Singapore sales, well, China has shrunk. Singapore has grown fantastically. It's bigger than China ever was right now. But they said very specifically in the 10Q in a footnote that the Singapore revenue reflects billing, not shipments. And 99% of what they bill in Singapore are actually U.S. customer orders being distributed somewhere else. And they refer to this controlled data center compute. So it's the H100, the GPUs, the Hopper GPUs, the B200, the GB200. Those are the things they can't sell in China. That's their cutting edge chips, as well as their DGX H100 and GB200 racks. Those are the systems with the semiconductors right in there, as well as all the networking systems and everything else. Those things are being sold officially to Singapore, but going elsewhere. Those aren't cut down parts. This is the highest end products coming from NVIDIA being sold into Singapore, and that business doing quite well to US customers, shipping them somewhere else. Maybe it's a tax thing, maybe it's an import control thing, but that's their explanation of that business. In after hours trading, the stock quickly rallied, then quickly sold off, and then slowly started to come back down about 2% when it was all said and done. And for the year, NVIDIA stock, not the calendar year, for the full year, stock's up 42% when the S&P 500 is up only 15%. So NVIDIA, on top of the amazing gains it's had over the last 5-10 years, still putting up some really big numbers. Now, we talk a lot about China. We talk a lot about the things in the edge that they're doing. But this is a U.S. business, USA leading by a mile in terms of where NVIDIA is selling their chips. And that was not true 2 years ago. That is true right now. And that's all about Oracle, a company that I work with, the stock that I own, but Oracle and Meta and Amazon and Google buying tons and tons of these NVIDIA chips, as much as they can get their hands on. So talking about where the business is going, talking about China, that was dominated a lot of the conference call. Here's what CEO Jensen Huang had to say, or at least a snippet of his comments from today's conference call.
The China market, I've estimated to be about $50 billion of opportunity for us this year. If we were able to address it with competitive products, and if it's $50 billion this year, you would expect it to grow, say 50% per year, as the rest of the world's AI market is growing as well. It is the second largest computing market in the world, and it is also the home of AI researchers. About 50% of the world's AI researchers are in China. The vast majority of the leading open source models are created in China. And so it's fairly important, I think, for the American technology companies to be able to address that market. And open source, as you know, is created in one country, but it's used all over the world. The open source models that have come out of China are really excellent. DeepSeek, of course, gained global notoriety. Q1 is excellent. Kimi is excellent. There's a whole bunch of new models that are coming out. They're multimodal. They're great language models, and it's really fueled the adoption of AI in enterprises around the world, because enterprises want to build their own custom proprietary software stacks. And so open source models really important for enterprise. It's really important for SaaS, who also would like to build proprietary systems. It has been really incredible for robotics around the world. And so open source is really important. And it's important that the American companies are able to address it. It's going to be a very large market. We're talking to the administration about the importance of American companies to be able to address the Chinese market. And as you know, H20 has been approved for companies that are not on the entities list, and many licenses have been approved. And so I think the opportunity for us to bring Blackwell to the China market is a real possibility. And so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race and help make the American tech stack the global standard.
But what's it all mean? What's your big takeaway? Jensen Huang, always so effusive about what's going on in all things NVIDIA. Probably maybe the most listened to CEO in the world right now. But what does it all mean? What's one number, your takeaway that will really kind of encapsulate these numbers, make you sound smart if you go to a cocktail party or swimming, whatever. All right, NVIDIA Q2 earnings 2026 Q2. Your essential summary tells you that NVIDIA had a really good quarter at 56% on a year-over-year basis, but the growth has kind of been locked in right there. It's dampened by their inability to sell into China because of import restrictions imposed by the U.S. government. Their H200 chip, which they once made exclusively to sell into China, they can't sell any. They didn't sell a single one in this quarter, and that hurt their overall sales. Even though they still sold a lot of stuff, they sold over $2 billion worth of stuff into China here. But their Blackwell chip, their cutting edge chip, is shipping. It's selling in great numbers and even more than it did last quarter. They're selling every single thing that they can make. And the question is, are those export bans working in China? Because revenues were down on a year-over-year basis into China 24%. And I think that's the most important number to remember, that while they still sold stuff into China, they couldn't sell their stripped down chips, the H20. They couldn't sell their very best Blackwell chips. And the result was a 24% decline in sales to China, which is why this quarter wasn't as amazing as it might have been otherwise. All right, thanks for checking. Hey, subscribe. Before I thank you, I want to thank you in advance for subscribing if you don't already. Subscribe to me on X at Cory TV, but at Drill Down Pod on TikTok, on Instagram, and our full reports on YouTube, at least our full video reports. Written reports are for customers, but the full free reports on YouTube. Please subscribe to us and let us know what you like.